What is up, certified family? What is up, certified family? So we in this truck, you feel me? In the back of the truck, I just cleaned up. I clean up daily. I got a habit with keeping it clean because it's like I need my feng shui to be cool. My feng shui to be cool. I need the flow of energy to be on point in this bitch, so I got to clean it up, you feel me? I got to clean it up. But anyhow, let me get some tunes started so I could, for my talk today, my little talk, let me get a little something to chew on real quick. Let's see what we got today. Alright, look. So check this out. I basically want to come on here and talk to y'all about trading earnings. So people that want to trade earnings or you want to get to trade earnings, as a beginner, stay away from earnings. Stay away from earnings call, right? And I got a personal experience that happened to me yesterday, right? Well, really, yesterday leading to today. So yesterday, Qualcomm went into earnings, right? Now this is why I say don't trade earnings, especially for beginners. And if you must trade earnings, if you already been trading, you already know to only trade earnings with a portion of your capital, like with a small percentage, because earnings can go any which way. And I'm telling beginners not to trade earnings because even if a company beat earnings, that don't mean the stock is about to go up. And this is something that I knew, but I experienced this personally yesterday. I was in Qualcomm calls, right? I got like probably 7 contracts total on 2 different calls. And they beat earnings. They actually spanked their earnings. But I think the amount of inventory they have and they guidance might have threw their earnings way off, right? Now, I like Qualcomm as a company. I might be like swinging out long-term calls on them because I think the stock will go up. However, the margins that they beat by earnings by, I expected the stock to go up. Real shit. I expected the stock to go up, like shoot up, and it did. Actually, after market, it shot up like $4, and that's like 4%, 4-5% for Qualcomm. After that, I think after the earnings call actually started, because their earnings numbers came out and they beat earnings. After the call started, shit started to go downhill. And today, it was down $7. Even after beating earnings, it was down like 5-6%. I'm like, oh, what the? It's like, I'm thinking it's another methodology on how these stocks perform, especially if they drop like that. I can see it happening to Qualcomm, especially on guidance. Like, you gotta be careful with trading options during earnings, because earnings, how the stock perform after earnings is not only dependent on the earnings report, but also the guidance of that company. So if the guidance of the report is not into like what the investors want to hear, that bitches have a sell-off, like Qualcomm just did. They beat earnings and they had a sell-off. So y'all be careful when trading earnings. I mean, you can make money without trading earnings. The best time is the best way to play earnings, and because also on earnings, you got to deal with implied volatility for a lot of big stocks too. Implied volatility, if y'all don't know what that is, I can talk about it in another video, or you can look it up. IV crush is what we call it. Like, implied volatility, your contracts can get smushed. You think you about to be up, that bitch can still go up a lot, and the implied volatility for your contract make your contract go down or even worthless. So that's things to be careful about when dealing with earnings. The best way to actually trade earnings is to, one, trade before earnings report, like days before, the week before. Like Nvidia, for example. Nvidia, 2 weeks before, always have this bull run before earnings. Nvidia have prime time play opportunities before earnings every time. Like 2 weeks before earnings, you can play the shit out of Nvidia. Like, that's how you're supposed to play Nvidia. And you also got opportunities after earnings. So like whatever a report do, like Qualcomm, for example. Qualcomm had a big sell-off even though they beat earnings. I know we still in a bull market. I know they about to have more buying opportunities for the next week. Instead of buying same day contracts, you might want to go a week out, because Qualcomm is definitely about to have a rise back up after it gives you a sign, after you get your signal that, okay, cool, this downtrend has ended. First of all, that was a big ass drop. $7 for Qualcomm, big drop. So now look for a buying opportunity. We still in a bull market. We have not went into a bearish market yet. We had a sell-off already from the Fed meeting, and then we had a pop up from that. If we have a sell-off in Qualcomm, it may not be following the market necessarily right now because of their earnings. They just had a sell-off. Okay, boom. Let me prepare myself for this bitch popping back up, which it will. So trading is really, like, a lot of times it's about being in position. Sometimes we'll know what's happening, but it's like you got to put yourself in the best position. So if I think Qualcomm is going to go up tomorrow, and I know it's going to go up in the near future, I'm probably not going to, tomorrow's Friday, right? I'm not going to buy same day contracts. I understand I can get more money if it do go up, but I'm playing it smart. So I'm going to buy a week out contracts. I'm going to give myself a longer time period when dealing with stock options, because in Forex we don't have to deal with shit like this. In stock options you got to deal with contracts, so you got to deal with contract type shit. Let me get an extended period so I can have time for that move to play out. That's the tricky thing about dealing with options. You got time going against you. So that's just a couple things to think about. If you know what I'm talking about, if you don't know what I'm talking about, ask questions. I can answer some questions. I'm just sitting here venting to y'all. You know what I'm saying? It's basically when people venting, you also get advice from it. So if I'm venting and I done experienced something and I'm talking about it, I got some advice to give about it because I've noticed it, I've been through it. So I'm like, okay, cool. This is something that people need to know, especially when dealing with earnings, because we always think, oh, earnings, we about to make some money, and it ain't always cracked up what it seemed to be. Everything ain't what it seemed to be. Something can beat earnings and still go down, like Qualcomm just did. So I see it coming and I tell it. You feel me? Shout out to Nips, man. But that's it, man. That's all I want to talk about. Quick 8-minute video. I'll drop another video today, maybe about another subject. So yeah, man. Y'all stay tuned. Appreciate y'all for checking in.